Hello, everybody. Kirk Spano and Scott Shooter Henderson for Shooter's Major Markets. And we're going to go through some of the big stuff and then a couple of focus ideas. Shooter, how are you doing today?
I am doing awesome. How are you, buddy?
I'm good. I'm enjoying the first time we got snow that covers the grass.
Yeah, I missed that.
Yeah.
It's just north of us.
Come on up and shovel for me.
No, I get a snowblower, man. I'm not doing that.
I've only got like literally a short walkway and a little patio that I have to shovel here at the condo. So otherwise, they're out there doing it for me. That's where our $335 a month fee goes, taking care of the pool and shoveling for me. I think it's a bargain.
I think the best HOA I had in my life was a place called Villa Matera in Florida. And the HOA cut the grass, planted new trees, shrubs, seasonals, everything. I never had to touch a blasted thing. They even controlled the sprinkler system.
Yeah. No,
Guess what the monthly fee was there?
In Florida, give me a year. What year?
2009.
Oh, I'd say $175.
$835 a month.
Back in 2009?
Yep.
Oh, you were a baller. Holy cow.
No, some of them are really high down there, especially the condos. The nice, I mean, when they're providing all the services, I mean, it's a profit center for them.
Yeah. Our condo complex is 50 years old this year, I think. And the buildings are getting old, so everybody needs to do work. We had to replace all the roofs, only second time in 50 years, and we're almost done. But it costs a lot of money, $25,000 a roof, give or take, and there are 45 buildings. So, we blasted through $1 million, and people are like, why is my fee going up?
Well, you have a normal life cycle up there. It's not like Florida. They just wait for the roof to blow off and then put a new one.
Yeah, right. Yeah, no. We get 20 to 30 years out of a roof. And these new roofs, I mean, they did the whole thing. They stripped them down, rebuilt the woodwork. And I think these roofs are guaranteed for 30 years. I'm pretty sure they are. They're pretty high quality. I don't know if the buildings are going to stand that long. So we'll see. All right. So tell me where the world is today. What are the big markets doing?
Well, let's start with the foundation, since we were talking about that. You see the dollar?
Yep.
Okay. So now I think, it's the tell here is we had a lot of breath closed right in the middle of the candle here on Friday, but it's telling us that the market's undecided as far as I'm concerned here. Now, our current count prior to the close Friday was 102, and that's pushed up a little bit, maybe to 103.08. So what that's telling me is I think we have continuation of volatility. So I think we extend first half of the week, or maybe we make it to, a push Monday lower, and then we had, maybe a turnaround Tuesday kind of thing. So, but let's jump over to the S&P and looking at this. I extended that box from the top of this flat because it looked like it was going to extend. I think we shouted that out Wednesday evening or something like that. So our next count now is down to about 463. And then we should head back up towards our target one in our primary wave 3. So this flat is just going to keep building out here. So it's going to be popping around. So if you're holding SPY, the smart move would wait till we get a top, just bring in your Fibonacci with your extension tools, or your Bollinger Bands with your extension, whatever app software you have, and wait till we get to the top of the second or third standard deviation and just sell some covered calls if you're holding that. So any thoughts there?
Well, so the way I use this analysis is really what you just mentioned, is when to sell some covered calls or when to sell some cash secured puts, because I'm obviously not trading for over short time frames like this, but I will sell options based on oversold and over bought on these shorter term time frames. So when you look down at your RSI, and this is a daily chart, you see that the daily is kind of right in the middle. It could come back up, it could head back down. If you flip this to weekly, what does it look like then? Because I'm really interested in the weekly charts. So you see that the RSI is pretty high, and it can always follow through higher, but really we should expect a little pullback at some point, correct?
Yeah, there's a possibility it comes back to this trend support down here. Let me go back to the daily for a second because it's a little clearer. But this trend channel down here, July of 2021 is the top of the band. That 382 fib, that little retrace I have in there. See, measuring our legs, we're in wave 3 now of an intermediate wave. So, technically we should measure this box. So 61.8 back is the most likely outcome, even though I target 50% because I want to be sure, it adds another 8% to me being right or wrong. So, but Mr. Market
it increases your margin of safety and it gives you a
exactly
wiggle room.
Exactly. I'm right a heck of a lot more than I'm wrong. So,
right.
But the 61.8 is what Mr. Market looks for. And, there's a lot of traders who trade that 61.8. But, so I think we stay in these bands here. And I think we're going to have some tells. But, some of the internals are turning a little bit. We have some downside in SOX and XLK and XLY potentially. And XLU is showing a little strength, but not too much. So we're not seeing that flight to safety kind of thing.
All right. So basically what you just said there is you're not too worried about being perfect, just as long as in the long run it's excellent.
Yeah, as long as I got the direction right, I'm good. Right now we're in this uptrend. Until this trend breaks, this closed below 457.08. The trend is your friend until the end.
Yeah. And what about a potential breakout to new highs?
Yeah, I don't. The most I think we'll get here. Here's.
Do you pop up the weekly for that look? That'll. I think people will understand that when they look at the weekly a little bit better. They see the longer time frame.
Hold on one second. Let me just disappear this because it's sitting right in. So what we have here is that we're in an intermediate wave 4 right now. So we're doing the downtick, maybe 463.32. And then we put in an intermediate wave 5 around 485, which also happens to be our primary wave 3 up there at that 485.54. Then we get that back test to that 467. Then we bounce again to that what becomes our cycle wave or our primary wave 5. And then we have a deeper drawdown, which is close to 45 bucks, where that wave 4 of the cycle wave is showing equality. Now, the challenging part here is where we are. Wave 3 is the longest wave. Looking at the cycle wave or the thesis behind how Elliott wave patterns work. Usually it's wave 3 that's our longest wave. So, right now looking at our primary wave, we really aren't in an impulse. We're in a leading diagonal, which has a more consolidated 3 than an impulse. An impulse leg would be up here. It would be the longest wave, maybe around 535, if that was the case. But right now, the structure of the wave right now doesn't imply that. We would need equality to occur on wave 4, both in the primary wave and on the cycle wave, which would mean something like this. And we would need really wave 4 to become almost a ending diagonal to get the breadth that high on the count up there. It's just the way those structures are. It's not, I don't think that happens. I don't think we have a new blow off top here kind of thing.
Right. So for people who don't really understand Elliott wave, they haven't, done that studying, and that's fine. Basically what he's saying is the market looks like it's going to do this, but there's a possibility it can do something a little bit different.
Always.
And all technical analysis.
The game is to know when that's happening. That's
right.
The game.
So you understand what the handful of scenarios could be. What's
not a handful, all of them. There's a set number of outcomes. You want to know what all those outcomes are so you can recognize that change.
Right.
And I see that.
So that you can see what the market is deciding to do.
Yep.
All right. So my guess is that at some point this year, we head towards 500-ish and new all-time highs.
I would think so. 500 is a big psychological number, so I would expect we get to that. We get some rejection. So yeah, it is very likely that this just pushes right up to 500 or a little above that because of that psychological factor. So because,
I see that you have a measurement for 2 weeks there. What does that look like? I always go from 1 week to 1 month. What does a 2 week do for you?
The 2 week just it gives me a time frame that's double the weekly, so I can see that outside of a month.
Okay.
It's a quick visual. I just go when I'm stepping up and down in the charts. It's one thing that I peek at, and because it gives you a little bit. Just like I come out and I look at the 3 month. Hold on a second. I don't know why, but TradeStation data does not like to work on Saturday. It takes it off. So
it's like me. It's like me. I don't like to work on Saturday either.
Yeah. So, But jumping out to the 3-month, when I'm looking at, our patterns, so, I'm seeing, this is the longer view that I have out here, as far as the S&P is concerned. So, the pattern that I'm looking at right now, obviously this is our next, mound, as I call them, structurally where I'm looking at where it is. So, this is our low. So we should come in somewhere around here if it'll let me pull it. But that's what mound structure to me looks like, which is supported by the count. So, we're now the one thing, Elliott wave doesn't measure time frames. So the breadth of your prior mound, it always expands. So this next leg would be, no matter what, we could come in and do this and, have a quick drawdown here. Could do that.
That's kind of usually what happens, right? Is you have a long grind up and then a sharp drop down.
Correct.
And that's
why they call it an elevator down.
And that's why I have only predicted a handful of crashes in my 30 years. But, we've been spot on. And I don't see a crash right now. I'm anticipating one in the next 5-6 years, but I don't see it yet.
Yeah, you got 50% back on our primary wave 3 here. That little drawdown right there.
Mm-hmm.
So it basically extinguished what euphoria was there, and we started over. So, it's sort of like if you ever use a compressor and you start it up, it takes a while for the air to build up inside the tank so you can actually use the compressor with any air tools or like that. It just takes a minute. And then once it builds up there and you turn it off and you open up the valve to drain it so you don't have it rust, all the liquid comes out and it's gone. It's really what happens when we have that euphoria get exhausted, because now there's no buyers and then the sellers take control. And then when the sellers get exhausted, it does the same thing. You have that basing pattern. So basing patterns in Elliott wave, I think, are very significant to the work. So, I spend a lot of time there.
I talked about that in the last webinar with China. Can you click the 1 month and then explain to me what the RSI tells you?
Well, the RSI, at this point, you've got clear divergence. You've got, a 3 mound structure, mound 1, mound 2, mound 3. Okay. Now, typically there's 3, 4, 5, or 7, and usually the number is 3. You get a decent drawdown. Okay. Which I would classify this as a decent drawdown. It hit my 50%. Sure. So, so this whole leg, these 3 mounds are 1 mound on the larger picture. So RSI is telling me that we're regrouping for our next leg up, and then we should have 3 mounds up on that side as well.
So on the monthly, which I've talked about a lot, we are not anywhere near being overbought yet.
No. We're just in a grind. We're not, there's, that euphoria, that overbought status here was gone down here. It's gone. It's like you start the clock over. We started from 0. It's like playing a new game.
Folks, do you understand what we just talked about there? It's incredibly important that you understand that this market is not overvalued, not by anything extreme anyway, and it's not overbought either. So while it's not cheap and it's not undervalued, it's probably about where it belongs today. So you really need to ask that question of what's it going to look like in a year or two, because this is what earnings can do based on falling interest rates, falling dollar, and AI, and a lack of supply shocks, and a lack of big wage increases. We could be going through a really nice period of earnings expansion, which could drive valuation expansion, which finally gets us to the FOMO that peaks out that RSI and makes us overbought at some point.
Yeah, it'll be a lower RSI. That one thing with divergence is you have your confirmed high, which is in this grouping, and so our next high will not confirm. So, we'll get a higher high in price and a lower high in RSI, and it'll probably equal. We probably take this trend line and draw it very much like out here. And this is where I use my equality thesis a lot. So around January 2025 is where we should see our next high.
Hey, did anybody put that in an article recently? I do. I see the next year or so into the first quarter next year. I think we see a couple of market highs.
I would agree. Right now, that's what it's telling me. All right, let's jump to the Nasdaq. Now, one thing that, a little different look here, I did a quick article on or video on the Magnificent Seven, and, a couple of them are in questionable areas. And I think there's two of them that will be to the upside. And I think that is an area that we should really focus on. If we're going to carry any of the Magnificent Seven, we want to focus on who's going to move and who's not. There's a number of candidates I did in that video for covered calls as well. That's probably worth $500 just the video, to the upside. But looking at what our count is now, right now we're in an intermediate wave, and it looks like it's going to be another leading diagonal. However, what I'm going to say is this structure here, and I want to come down to the 90-minute. Just spend a second on this look. Notice the RSI structure that we have here for this base. So this is a nice bottoming pattern that's occurred. But yet we didn't rally on what I would classify as our third drive. Drive 1, drive 2, drive 3. Okay. And what I mean by didn't rally is we should have gone to at least 50% back. So we should have gotten at least 401, 405 if we were going to see euphoria take us out of this on this low. That's sort of my thought. So jumping back to the daily, there are set patterns in a corrective leg. It's an ABC. It's a 333, a 353, et cetera. And you can have flats in there, but basically it's an ABC pattern. So what I'm thinking of here is, okay, so we've got this sort of drive 1, but we didn't really get back to our look. So to me, this looks like we're going to get an impulse leg here. Maybe something like this, where we come down lower, because we really need to get back to that 405 for us to have a flat ABC pattern. So an ABC pattern would look very much like this. Let me just draw one would look like, and it would be something that we would get like this as far as equality, maybe something like that. But right now, it doesn't look to me like we're going to get that ABC pattern because we didn't get that back test. Make sense?
Yeah, I think that the Magnificent Seven is kind of a question inside of an enigma, inside of a riddle, right? I mean, I think that they are the best companies in the world with the best balance sheets.
Yeah,
and they have so much control.
Well, I'm talking a piece. I'm not talking 25% of your portfolio. If you're going to do it by sector, when you break your sectors up,
right?
Maybe 15%, 20% max. Yeah.
Oh, so I'm generally just using QQQ because I buy that basket of Magnificent Seven that way. The reason that I'm looking to potentially buy individual Magnificent Seven stocks on a correction is that I think that there are catalysts for Google and Amazon in particular to get into spinning off a lot of businesses, or at least I think AWS gets spun off with Amazon, and I think that leads to a 50% gain really quick. And I think Google is just going to keep on spinning out baby Googles.
Yeah.
Because
I agree.
That's all they fight regulation.
Yeah. Not getting too far off base there on the basis. I mean, my comment was more applied to the Qs.
Yes.
Because obviously the Qs right now, Google's holding its own, right? Meta's holding its own. However, Apple's sort of in this flat, Microsoft's sort of in this flat, Amazon's in a little trouble. We got a little bit downside as far as Amazon ahead of us. Giving you a quick visual of Amazon, I'm looking for 132 in Amazon, so just going back to the Qs as far as the look, my whole concept there is that it's weighted to the downside. And I'm saying, hey, maybe we don't want to hold the Qs. Maybe we want to go back and hold Google and Meta, for the first quarter, maybe even into the second quarter, and forego taking that heat on Amazon, because, Amazon's a big chunk, of what the Magnificent Seven is, even though it's going to have some great upside when that bottom comes in. That's just sort of my thought. I don't want to go too far off base, but, looking at the Nasdaq, or at least QQQ here, right now the count says we're going for an intermediate with 38429. However, once this breaks below the 50-day, that count will flip and it'll show me whatever our next leg is. So, part of it, like I've mentioned time and time again, is that when you're looking at an Elliott wave count, you want to look at all the possible outcomes and what are signals or tells that it gives you in which direction we were going to go. And right now it's telling me that we might see a little continuation here in the Nasdaq.
All right.
Cut and dry.
Sounds good.
Okay. Looking at the Dow, now, surprisingly, this entire week, relative strength. We're looking for a little bit of back test, maybe to 367. Then we head for our primary wave 3 around 390. And then we get a decent drawdown. So we got that flat again building out as far as that look. Now, notice how when the Dow started to wane, the Nasdaq accelerated and the SPY accelerated to the downside, which is indicative of relative strength. It's where everybody's putting their money. It's, sort of like you're looking at the S&P as a little riskier right now because it's toppy to some degree. We're seeing that here as far as the Dow, as far as the thought.
Okay.
And let's jump to the Russells. Now, we got a potential flush here. It's pretty aggressive, this line right down here. That's challenging because I'm looking at 169 as far as our first minor wave 1 down. And let me just give you a channel so you can see what that looks like. Now, that's also what we saw in, a couple of the micro cap names is they came off really quick. And unless we get a decent bounce, and we need to get 50% back quick, I'm going to say close to that 200. This will accelerate down to the trend support. Then we probably get a little bit of bounce there, and then we come in and put our 1. Or it could flush right down to our August 218 lows because there's really not much support down here that's going to stop us.
Yeah, well, that's why we don't really use small cap ETFs. We have to pick our stocks.
Right, exactly.
I think it's much easier to manage individual stocks than this big index that, frankly, indexers don't put a lot of money into.
Yeah, but basically going through the 4 indices, I think it's just we're going to be flat to choppy. We're going to back to that directional look to some degree.
Okay.
Well, let's take a look at TLT. Now, I think the market is baking in another rate hike.
Wow.
Because we came off really quick on that news, broke our support at June 2005. And, we got a little bounce into Friday and, we covered our longs there thinking that we're going to get 89 for a better price to go shopping.
Okay.
Okay. And then today I wanted to cover, biotech, the AI advantage, I think is going to really be most beneficial in sectors that use a lot of data or have to use a lot of data and look at, different views on a grander scale. Hey, it takes 10,000 people in multiple biotech sectors to come up with, mRNA as an example, but that's more on the geno side, but I think biotech benefits as well. Modified dog food or whatever that they ultimately come up with. So right now the sector is telling me we're at a breakout line and we should head a little bit higher. Now the advantage of this look is that breakout could get very euphoric, maybe up to about $1.87 as far as the look for me. So once we get this 141 and we're going to get a little bit of a back test to maybe 137, and that's your buy entry, that's your next entry long. But, there's a good shot. We shoot right up to that 61.8. So, there's a good shot at a $25 to $30 gain on this particular ETF just from that look.
All right.
Beautiful.
It makes sense to me. I'm pretty bullish on biotech again after a pretty long period of ignoring it.
Yep. And let me jump over. Somebody had asked about crypto, but they'd mentioned, hey, why don't I cover Riot? I just 1 second go there and then I'll go back and go over Bitcoin. Riot has had a negative or a bearish count for quite a little while. So, I had it's extended, but realized when the count was around 14, that there's a maximum level it's going to extend. So, drive 1, drive 2. So the most we're going to get is drive 3, and then it's still going to flush. So when I have that in front of me, when I'm looking at a chart, I don't want to be posting that chart saying, hey, we're going to go up to these 2 and I get all these people in it when I know that we're going to have a corrective leg. And the one thing that the miners are seeing universally to me is like a buy or sell the news kind of event from the Bitcoin ETF being approved. And on that, let me jump back to Bitcoin.
Here, let me jump in here on the miners.
Yep.
To me, the Bitcoin miners and crypto miners in general, but the Bitcoin miners it's almost all Bitcoin. The companies to look at are the ones that have a energy business that is beneficial as well. So the companies that have cheap energy and then have energy that they can sell when the grid needs it, I think that that's what you need to look for. I think it's the only story that supports the miners with a type of margin of safety that you'd want to look for. So if you want to be in miners because there's big upside, it's leveraged to Bitcoin a bit, look for the companies like Marathon and Iris that have an energy business that makes sense.
Agreed. One thing too is the GR20 token. I mean, that has just been unbelievable. I mean, right now they're selling a Bitcoin at roughly 65K because of the premium they're earning off of those internal mining fees. So as long as that becomes a driver for the miners, this is just going to keep building. As a matter of fact, I think BlackRock is going to go on a buying spree and start buying these things up. Just ending on this, the best looking chart I have right now is Hive.
Okay.
Reason is we've gotten this nice drawdown. We're going to be about 394, and we're looking at about $8 to the upside. I mean, that's just going a little bit beyond this week, but it's, I'm looking at, 1162 by the end of June, July 2024. So once the derivatives go into the markets, which is one of the reasons I like XRP as well, because it looks like they are going head on into the derivatives market, which is a $15 trillion market. And basically in Bitcoin or crypto, nobody's got a piece of that. None of it is done in the crypto world right now. I mean, we have one treasury contract that right now that is monetized through crypto. So that's a whole different realm. I mean, that's a bigger beast than all real estate in the world, because the derivatives used to fund all those projects is ultimately how the federal government funds their budget, et cetera, because that's the liquidity that we see come into the markets.
Right.
Make sense?
It does. And the one thing that I would just want to put in the back of people's head is that those fees aren't going to stay high forever.
Agreed.
Those fees have to come down because as the market gets bigger, it'll demand better fees. You'll get more competition.
Yeah.
It'll just become better. And you're going to have miners that win and others that lose as fees come down. And understanding who the winners and losers are is going to be important. So even though the giant pie will get bigger, it's going to develop the same way tech did and and pharma did, is you're going to have an oligopoly that develops.
Yeah.
And our job is to figure out, okay, who are the 3, 4, 5, 6, 7 that are going to be in that oligopoly.
I think ultimately BlackRock, and it's right now, I think it's known in the market that BlackRock is going shopping for miners, and they are going to put billions into that. If they don't acquire something out there, they're going to build one.
Yeah.
Because it becomes a second, basically any transactions they have, they have their fees, because, it's just like Fidelity's talking about their fees right now in crypto. That's a huge moat, and they don't have a piece of that. So they want people to, buy and sell that artwork or do those contracts or do those treasuries or derivatives within the blockchain because it's going to be revenue generating. They'll actually earn more fees doing that. If you've recently sold Ethereum, as an example, it was $38 the last time I moved some, and I didn't move a lot, whenever, so somebody got paid for those transactions, and ultimately I think it's going to be BlackRock.
Yeah. Here's the way I see it shaking out. Similar to that, it's going to be Coinbase by BlackRock. It's going to be Marathon, a Goldman Sachs company. It's going to be Hive Digital, a JP Morgan company. They're all going to get bought because they're all started by entrepreneurs. What do entrepreneurs do? They start a company, they build it up, they sell it.
Yeah, exactly.
And the big stay big and get bigger.
Exactly.
Then the next generation of microcaps hits, and you have your 100x stocks out there that come next. I think that a few of these Bitcoin miners are very interesting on the pullbacks.
Yeah, I agreed. I think we have to get through this ETF FOMO. And, if we get a drawdown there, it should be pretty quick, because we'll see some profit taking.
Okay.
And I think that's going to be our low there if we get it. If we get it, if I come back and I'm looking at Bitcoin, this was on the news that the SEC was not going to approve any ETFs and they were going to decline them all. So that sort of gives us a premise of, hey, that was on the rumor. So I think it's a political move now with the SEC. I think they have to approve it. So I don't think that is a potential outcome for us.
I think if they don't approve these Bitcoin ETFs, there's holy hell to pay over at the SEC. They just want to, as a regulated guy, here's what I can tell you. They don't want to ban anything. They don't want to ban anything. They want to collect fees on regulating it. And they want to have little fiefdoms to protect them and make them important. And that's the way it is. Yeah. So this whole DeFi movement is what they don't like. They don't mind Bitcoin because if Bitcoin can be the thing that keeps the dollar from going through the roof, then they like that, because nobody wants the dollar to go through the roof. We've seen all the problems that it causes when the dollar gets too strong and really starts flexing its muscle. I mean, look, the dollar is Arnold Schwarzenegger in a weightlifting contest or in a bodybuilding contest, right? I mean, and nobody gets that. Nobody understands how ridiculously strong the dollar is. And if we're not going to run deficits in the future, right, because we have to gradually pay off the debt over 30 or 40 or 50 years, how are we going to keep the dollar from getting super, super strong if we run a lower debt profile? The answer is you create a currency that the emerging markets can all get a piece of, and they get to kind of band together with their growth and support a euro-like currency. What do we care how it works? Maybe we even kind of control it because we own a bunch of it. There's a lot of moving pieces here, but the currency equation has been important for 1,000 years, for a couple thousand years. And, you remember the stories about how the Romans debased their coins, right? The dollar is the opposite. The dollar is so strong that we have to find ways to keep it from just dominating everything, because then you get worse. So if Bitcoin can be the thing that brings balance to the force, I really think that's what it is. I don't think you're going to buy your pizza with it. I think it brings balance to the international monetary system is what I think. And you may not have heard that, or maybe you did. I don't know if my my microphone picked it up, but there's an Amazon delivery driver here. The Chihuahua just announced it. I think it's pretty clear that the financial system is adopting a handful of cryptocurrencies to make it more efficient.
Yep.
And
they're being selective
and make it cleaner. I mean, I think that you can use Bitcoin and Ripple and Chainlink and the other one. There's one more that what's the fourth one that's getting adopted by the IMF and World Bank and everybody
There's
else?
Actually 6 of them that are being tested.
6 of them, yeah. So there's a small basket, and they'll be used for efficiency in a way that helps facilitate transactions across borders and for maintaining balance in national balance sheets. And, really, like I said, you're never going to buy your pizza with it unless you're in a country that just has crummy currency. But I think that Argentina is really the country you should be looking at as an example of the way things are going to go. And I think Marker's got this right, is crypto's not exactly a currency. I mean, it's categorized as a
means of exchange.
Well, Bitcoin is categorized as a commodity, really. Marker says, so crypto is really a kind of a multi-dimensional hedge. And the way that I would explain it would be, is Bitcoin, right, is different than the other cryptocurrencies. Bitcoin is the most like money. And then Ethereum and some of the other ones are like software as a service, just a better way of software as a service. And you saw how much money that created. So if you can take transactions, and just all sorts of transactions, and use crypto functionality to make those more efficient and reduce fees by 70, 80, 90%, that's beneficial, right? At the consumer level, from an economic standpoint, that makes sense.
Use Russia. Russia's a great example. Before the war, when the war started, right, if a person owned the ruble, right, all they needed to do was buy Bitcoin in the Swiss franc, right? Buy Bitcoin in the Argentina peso or whatever it is, and then buy the Canadian dollar in Bitcoin. So just buy the denomination in those countries. They would have been completely hedged, and actually they'd be up about 50% right now.
Right.
What vehicle do we have anywhere else in the world? Because the exchange rate, as an example, go to the bank and we have the dollar, whatever country it is, we pay a fee to exchange that to the peso or the ruble at the institutions. But with Bitcoin, you only pay the transaction fee on Bitcoin.
Right. So our one of the questions here in the chat is really asking, how does the cryptocurrency work as a hedge? And to me, Bitcoin is the hedge. The other ones are just replacements for software service. So Bitcoin is a hedge against the dollar getting too strong. That's really what it is. And people want to say it's a hedge against the dollar getting too weak. Sure, the empire might collapse. Whatever. If it happens, it happens. The idea that people just don't functionally grasp, over and over again, I say this to just get people to consider it, is the dollar left to its own devices would be at 150 or 160 or 200 compared to the other basket of currencies. The dollar is ridiculously strong and nobody can touch it. 2 or 3 steps down is the yen. 2 or 3 steps down from that is the euro. 2 or 3 steps down from that is, the renminbi, the yuan, and there's nothing else close. So at a functional national level, remember, a couple hundred countries on the planet, what do the central banks of all these other countries do to support their economies in a counter-cyclical way when they have a recession?
Yeah.
And well, so Bitcoin gives them underlying strength to their national balance sheet. It protects their currency.
Look at Argentina.
At the local level, Bitcoin protects their currency at the local level. But Bitcoin also at the international level provides a means of exchange.
Well, it's a natural basket of currencies, just like you mentioned.
Right. So it's basically a decentralized euro for whoever else holds it, mainly emerging markets, and unfortunately some countries that just don't like the United States. Look at it from the standpoint of India. India has dual concerns. They want the rupee to be more used, at least regionally, right? And a little bit with big trade with other countries. However, they also want to not have the rupee get too strong because it hurts their export business. And they need to make sure that their national balance sheet is strong enough so they can't get hyperinflation like Argentina just saw or Venezuela, right? So you're balancing all these different things. And ultimately, what you want is a way for currencies not to fluctuate as much. And Bitcoin can be that thing that kind of unifies all the economies. Because what is a currency? A currency is basically backed by the strength of the underlying economy that issues the currency. Well, nobody issues Bitcoin. There's just a lot of people that own it and agree that this is one of our means of exchange. This is more a store of value, not even a means of exchange. Because we're not going to buy our pizza with it. It's a store of value. It creates a unit, of pricing that allows you to say, okay, this is a thing that's backed by all the economies, not just ours, and therefore it has value based on the world economy versus the United States economy or Japan's economy or China's economy or India's economy or Germany's or Switzerland's. So that's what Bitcoin is. Bitcoin, think of it like a global euro that's decentralized. The strength comes from the user base, which is all these different economies, again, all the way down to the micro household level. But mainly most of the Bitcoin's held by, big whale accounts, which are sovereign wealth funds and some of the early adopters and then central banks and, the FBI because it seized a whole bunch, or China that seized a whole bunch from criminals. So the idea that criminality is going to run rampant because of crypto is wrong.
It runs rampant anyways.
But crypto is, oh, at least in the early days, Bitcoin, they didn't know how to handle it, but now they can go after these Bitcoin wallets when they catch the bad guy. And then what happens? Who gets that money? The government gets that money. So it's almost a way of saying, they use this to steal and basically launder their money, and we figured out ways to intercept it. So we can catch the bad guy, we can get the Bitcoin, and we can keep it. I mean, it's a cat and mouse game, but the reality is that Bitcoin is just another currency on the international market. It's more like digital gold, right? Because you don't transact, you don't buy your pizza with gold, but it's basically digital gold, and
it's better than gold. You don't have to move it.
Right. You don't have to store it either.
Yeah.
Not really. I mean, you don't need a big vault. So that's really what it is. So in a crisis, and this is what one of the questions was, in a crisis, how does a country create the monetary conditions to prop itself up? And I think the answer is pretty simple, is your big international central banks can't be tight for too long, right? I mean, everybody wants the Fed to stop printing money because they think that that's a good answer. And it's not. It's not. The Fed should print enough money to offset population growth, not just in the United States, but globally. And that would support a drift upward in standard of living and GDP per capita. Somebody asked, doesn't your premise indicate that Bitcoin will need to stop fluctuating? Not completely, but after a while, the range would narrow for sure. And just like the range has been between 80 and 120 on the dollar, at some point, Bitcoin will do the same thing.
There's always extremes, but I agree with you. I think it tightens up a lot.
Yeah, it'll tighten up, but I think that it tightens up
because of scarcity. Nobody will be selling them.
Right, but it tightens that, and that's where you get your lack of new buyers, right? But I think
that's continually expanded.
Right.
I don't think that trend ends, and I can just give you a timeline from my reading. 2035.
Yeah, a generation. It's a generation.
Because there's so many people who don't have the don't have internet, don't have cell phones. Okay. And as AST Space Global, for example, expands that network. It's just going to keep growing, and it'll max out very much like the internet has.
So the idea of Bitcoin as a currency hedge and how high it can go until it's done going up, it has to do with saturation. And at the micro level, the early adopters, if you have Bitcoin now, you're going to be unusual, because when Bitcoin gets to 100,000 and 300,000 or maybe 1 million, people just aren't going to buy it anymore, right? I mean, you'll get your FOMO rallies and then it'll come off 30 or 40 or 50% or 60% or whatever.
That same argument was there at $100 though. And it was there at 1,000.
Yeah,
it was there at 5,000.
Yeah,
it was
but
there at 10,000.
That's just guys like you talking their trade. Who cares? The big picture is that Bitcoin is going to end up on national balance sheets and at big sovereign wealth funds. It's going to be primarily owned by big. So that's why you're not going to use it for your pizza, right? Yeah. And what's coming next are these central bank digital currencies to facilitate all your transactions. And as far as recessions go, look, if you haven't learned anything about recessions in the last 40 years, then, again, don't manage your money. But this idea that the United States isn't the linchpin on bailing out the world, we just are. So every time we print money, the world gets better. And could it be that we need some partners in that? Yeah, it would be great, but Europe just doesn't have a growth engine.
It could be nice if we just got our partners to pay what they agreed to pay.
That doesn't even matter, man. I mean,
I agree.
That's just more rhetoric. Look, the thing is that demographically and technologically, we are still in the slow growth forever economy, and we're going to be until we're really, really into space and maybe population goes up. But we're at the point where the population curve is flattening everywhere, right? Some places more than others. We're barely replacing ourselves anymore, and that's deflationary, especially as today's population becomes older. And then technology is deflationary. You really have to wrap your head around AI here, because it's part of this big secular thing that's coming, which is if you want to keep working 60 hours a week like I do, you can, and just use the AI to do even
But you won't
more.
have to.
But you won't have to. If you just want to plug and play into the economy and have a job and then go fishing and play with your kids and do your sports and your bar league darts or whatever, and you want to work a 30-hour week, that's what's coming. Is the labor force and the auto strikes, they hinted at this. They asked for a 4-day work week and they were told no for now. They're going to get it eventually. And the next time there's a labor strike, which I think is 3 or 4 or 5 years out, I forget how long the agreement was, it's going to be not so much based on more pay. It's going to be based on we'd like more time off for what we're earning. And that's going to come everywhere, everywhere. And currency has a part of that. If you want to look at the world from the standpoint of getting a bigger slice of the pie, that's fine. But at some point, you have to realize that the pie is only so big. And there's going to naturally be more distribution of the pie. So how do you do it? And how do you do it without people, resorting to tribalism or fascism and creating warlike conditions at either the city level or across international borders? It is not inconceivable. I think I used that like in The Princess Bride. I used it wrong. It is not unrealistic to think that aging demographics and technology and Bitcoin and space travel and all these things are linked in a way that the spider web is strong and actually ordered, but it's hard to see. From the standpoint of how much would Bitcoin have to be worth to act as this international hedge? Think about this. $26 trillion US Treasury market, right? Bitcoin is going to be worth trillions. I have no idea how many trillions brings balance to the force. However, it's trillions, and we're not anywhere close right now. I think it's 10, 15, 20 times higher. It's at least 4, 5, 6 times higher. But I think that you need to have 5 to 10% of the value of all currency on the planet will probably be Bitcoin in the next generation. That brings stability. That brings some equality, some egalitarian measures to the currency system, and it keeps the dollar from dominating everything, which is bad in 2 ways. One, it crushes other people's economy, other nations' economy, but it also pisses people off to the point that they start wars. You don't want that. So the dollar can't be allowed to get too strong, or it leads to war. I mean, bottom line, dollar being too strong leads to war. Bitcoin prevents that from happening, I think. And you can listen to the maximalists to say it's money, you're going to buy your pizza with it. It's going to replace governments, it's going to replace the central banks, it's going to destroy all the oligopolies, and it's going to allow us to all be trillionaires. Look, go zuck yourself, live in your fantasy land. I don't care. I'm telling you what the right economic theory is. And in the last 25 years, when I say something like this, I might be early, but I ain't wrong. And that's where Bitcoin is going. That's why you need to own it. And you want to own it before it doubles or triples again.
It's like the roller coaster.
Because it's going to. It's going to double or triple again.
We're only we've only started. That's what it's actually unbelievable when I look at it and realize prior, look at the TV, the radio, the internet, cell phones, etc. We are so early here. It's just absolutely unbelievable. I mean, if we miss it, it's because we just wouldn't act.
Bitcoin ETFs are not the end of the game. They're the start. It's the start. Bitcoin.
Then we get derivative ETFs, et cetera,
right.
et cetera, et cetera.
Bitcoin ETFs are like batting practice ended, Star Spangled Banner just played, and now it's time to throw out the first pitch. That's where we are. Everything else was getting through grade school and high school and little league and college ball and the minor leagues. This is it. This is the ball game starting right now. This is the normalization and regulation of the monetary system playing out. That's where we're at. And you haven't heard me be passionate about this before. I've been hinting at it for about 1.5 years, right? And there was some good trades in the last 5 years. This is a change in international right? This is a change in the international monetary system. And the early adopters are going to get rich off of this, really. I mean, you're not super early right now at 45,000, but in relation to 300,000 or higher, I really don't see it not going to 300,000. I can't figure out how it wouldn't.
840% from the time I wrote my GRC 20 article. Phenomenal returns. This is the beginning.
Yeah, well, and when I told everybody to buy GBTC last year, right? I mean, now people are asking me about it. Oh, but it's up so much. Dude, it's not even at an all-time high yet.
Yeah, buy the dips.
Buy the dips. And or dollar cost average. I showed that chart in the last webinar. Just dollar cost average into it. Because it's, and then buy the dips too. Just dollar cost average in and buy the dips. I showed you the chart before. The people that just wait and try to time it, you lose because you're in cash, and you lose because you're bad at timing. And that's the way it is. We're helping you with the timing. We're telling you the dollar cost average in. We're showing you where the dips are. I think that's about all we can do. You gonna talk me down, Shooter?
No.
Great. All right, everybody.
I think markets. I think there's two trades here. Just watch it after this ETF cycle goes through. It's probably going to launch. I think it goes to 55, 56. That's really what I think. However, I don't have the cojones to bet on that yet because there's too much of a chance I'm going to lose half on the downside if I'm wrong. So I would wait till after the Bitcoin approvals. That's to January 10th. So we're talking next week, right?
Well, that'll be your dip. You should still be dollar cost averaging it.
Yeah. If we don't get a dip,
you don't know that.
Hang on. That's hopefully you're in at this point. So,
yeah, but even if some of the current traders sell, but BlackRock is buying, that's it. That's all it takes. BlackRock's buying, and Goldman Sachs is buying, and Citigroup is buying, and everybody else is buying.
Yep.
So that's where we're at. All right, I've had enough. I got poker. I have to take a nap, and I have to get Global Trends ETF out to you. So have a nice day, Shooter. Have a good weekend. Make sure you.
Thanks for having me.
I want Shooter to not work for 24 hours straight at some point.
Yeah, I don't work 24 hours.
All right. Well, I want you to have a whole 24 hours of no work anywhere in that 24 hours.
Actually, I'm playing more now than I ever have.
All right.
It's just when I don't work, then it's a lot more work to catch up. That's it.
Yeah, I get it. I get it. Been there.
Great.
All right. And have a good one.
Hey, too, folks. If you would make comments on any improvements you like on the charts or not, I'd like a little feedback if you folks could do that as well.
Yeah, as much as we love you in the chat rooms, if you could throw some comments and questions up on YouTube or some, hey, this was great on YouTube. And share
good, bad, or ugly. Hey, we're trying to improve here. If I don't hear feedback, I don't know what to change, The
one thing we haven't been great at is marketing, so we have to rely on you for that. All right. Thanks a lot, everybody. And hopefully.
Thanks for having me.
Big poker tournament tonight. So hopefully we make a couple bucks.
And until next time, folks.
Take care.